All right, let's jump into it. Where we at? 31st of May. So actually last day of the month and that, but of course the trading month is already wrapped up on Friday. Um, so we can sort of start to sort of head into the new month and maybe sort of see a little bit of a peel back of some of those positions. I think could have been end of month sort of flows. I think they also could be sort of a little bit of sort of positioning coming into the weekend because of course we're hearing a lot of headlines, not a lot of follow through, but we're hearing a lot of headlines about positive steps forward with the whole, excuse me, Middle East sort of situation. And I think the market is cautious of this, and I don't think it's the only driver. And I think it's one of those things that will sort of once it happens, it's not even that it's going to happen. Like, okay, let me start that again. It'll happen, but it's not like okay, now we've announced the war's over, bang, and it's done. No, there's going to be a process to these sort of things, and it's sort of like so the market sort of is going to sort of certainly react as that sort of next stage becomes apparent. But then we're going to go into a whole new cycle, in my opinion. It's like when the war first breaks out. Like, excuse me, you see sort of like all the troops amassing at the border, and everyone's like, "Oh crap, something's about to happen." And then it first happens: oil spikes, gold spikes, dollar drops, whatever, however the reaction may be. But then, sort of like as we get into the thick of it, you know, we start to sort of see different things sort of the market react to different things a little bit. And I don't think it's going to be as a matter of like, okay, yep, they've entered into a peace agreement. So apparently they're going through an MOU, so it was a memorandum of understanding, to then start talking about the peace agreement. Once the peace agreement comes in, I think then the 60-day counter starts and they have sort of more discussions and negotiations within that 60-day period. And this is what I'm saying. The market sort of position, you saw oil's been pretty much hammered down. We saw a strong recovery in gold and the dollar sort of coming down because we've seen on these little headlines that have come out that when it sounds positive, we see gold spike. When it gets pushed back a little bit, we see gold drop. Same, well, inverse, but same with the dollar. When we see sort of things go, oh, okay, it's getting a little bit better, we start to see the dollar come down. We start to see oil come down. But this is just the market, in my opinion, potentially, partly at least into the weekend, positioning for the idea that we might get some sort of positive headline. Now it's 2:15 on the Sunday, Melbourne time, and as of yet, we haven't heard anything. Like, there hasn't been any sort of major developments with it all. And as such, gold's pretty flat, oil's up 1% or something, like a tick, a couple of cents, maybe close to a buck or so in the weekend markets. Now, of course, weekend markets have still got another, 17 hours or something before we actually see markets open. So it doesn't really mean anything. The only real sort of takeaway with that is that there hasn't been drastic movements in it. You're not looking at a 5% gap, for instance. You're not looking at sort of gold 1.5% move, potentially, like on the weekend market. So everything's a little bit quiet on the Middle Eastern front. But I think a little bit of this sort of like dollar weakness, as we could see, that sort of came through here. Oil coming down, gold sort of spikes, or gold's moving for another reason as well, which I'll sort of cover in a moment when we get to gold. But I think a little bit of this, should we not sort of see any headlines, we could start to see maybe at least early week a little bit of a rebalancing of some of those sort of moves that we saw into the end of the week. So anyway, that's a bit of a sort of overview of what kind of my feelings sort of coming into this sort of week with the market. In terms of the technicals of that, we can get into it here. We've got DXY obviously up on the screen, so it's a good place to start there. But we can see that it tested down underneath this range that it's been in, and this is range it's been in since, well, for the second half of the month there. So for 2 weeks, it's just been bang, 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 bang. We got very close to a breakout, as you can see at a point over here, but unable to really sort of secure it. We got another headline to then match it of like, hey, things are progressing, and we saw the dollar get slammed back down. Okay, so we know what's happening there. We know that it's in the range, attempted to break out, false breakout as of that point. Respected this resistance that we've got in there at that sort of 99.40 and change. And then obviously bang back down to the bottom, and now we're testing out the bottom here. Now, the fact that we came out the bottom but didn't continue to break down, I think needs to be of note. But it's in a bit of a questionable area here at the moment. So let's put on the 4 hour so we can have a look. So realistically, what I'm sort of seeing here at the moment is, yes, okay, we can update this a little bit, but it's a couple of sort of points either way with it all. But 38% retracement, still bullish. So the fact that it hasn't sort of just come all the way back down here means that, obviously there's still some sort of interest in buying the dollar at this point here. So, and like I said earlier in the week, any sort of dips down into this area, I wouldn't be surprised if they get bought up. Now, the flip side of this is that it closed kind of on this range, on the support here. So it doesn't really give us a clear cut. Is this making this move down here to back test to then come down further? Or is this just a quick little duck underneath and then it's up into the area and then moving up? So if we look at it on the daily, you can see it really just closed on the line. And typically, I would say the fact that it didn't close down underneath would be more likely that we may actually see a bit of a reversal and sort of a move up, at least with some dollar strength through the week. But of course, again, let's flip back down on the lower time frame. You're going to need to have to see these sort of confirmation levels come over these things. Let's get rid of this because that was a gap. As you can see, gaps, bang, they love to close. Oversold. Found support coming into the end of the week. Disregard the last 4 hour there. Nobody's at their desks. Um, I think this is going to be the tell area for the dollar. Yeah, actually, let's change, get that. Just to clean this up here a little bit. How do I make this a little dotted one without going through all the settings? Do this. Okay, that'll be fine. Move it out of the way for now. So I think this is going to be an area that's going to be interesting for me. So if we sort of put in a little bit of a zone through here, I think this is where it needs to get back above to sort of tell us what are we going to do. So let's grab this guy here, we'll put him here, and make another one and sort of come off here. So again, I do think that with lack of any sort of headlines, that we could see a little bit of a bounce back up into here. But this, for me, will be that little bit of a tell. Because, whoops, this is going to be the area in which it's going to sort of determine and tell us, is this actually a back test in which we're looking for Friday's lows for confirmation for it to come down a little bit further? Or are we going to see this thing actually just be a little bit of a shakeout, fake out to the bottom side over here, and then we come back up inside? These ones did it within one candle, but you get the idea here. Moved up along, wick, bang, and then pushed back down into the range. And obviously that was headline driven, but it got back down to the bottom of the range. So early week, we're over. Again, this is on the 4 hour. We're oversold. We've got a little bit of a sort of bounce back up here. If this thing gets back above, say, 99.15, really maybe that wick you'd want to say, which is about that midway point of the range, but above, say, 99.20, then I think that's going to make this a bit of a fake out, and then we're targeting back up again and range and just continuation till we actually get something a little bit more sort of clear cut with it all. I mean, look, if you look at sort of the yields are coming down here a little bit, but still very elevated as a whole. They actually dropped down a lot. Here's my little idea that we would sort of go up here. We got that. We got the pullback, yeah, but of course they kept on pulling back. But as you can see, this is like people say you can't really sort of you can't chart yields, but look, I wouldn't base my whole trade off it, but I wouldn't be. I beg to differ a little bit. As you can see a couple of sort of times here, I mean, this was a little flag that we had working. That came out pretty much like to the point with it all. And you can certainly see when these things break, back test, boom. So look, there is some sort of sense to it. Anyway, point being is that we're still fairly high here at 437. So should this thing sort of at these previous highs over here sort of find some level of support, and we start to see this thing appreciated back up over here, we bottom out on the RSI, and we try to hold this sort of 4.43 area and start to see it move back up here, that would, to me, sort of be at the same time, we'll probably see the dollar sort of get back up into that range. But as I said, short term, I'd certainly be looking for a little bit of early US dollar strength. If we don't get any headlines, if we get headlines, well, any bet kind of thing. You come down here, most likely get a deep correction down to 98.36. But I would say that this is the area I want to sort of see what's happening, and then I'm going to use that obviously in conjunction with a couple of our other trades. All right, so let's take along, have a look at gold. So gold really got absolutely sort of hammered very nicely sort of through early part of the week. Is this back here, 27th? Yeah, so early part of the week. Very nice sort of like moved up, picked out that area just absolutely perfectly. This is the power of the 38%. Target the lows and then it absolutely crushed through here. But of course, this bounce back through here is certainly quite a big sort of reversal. I mean, it pretty much undid that whole move. And this is the whole point of sort of people that sort of like, when they're sort of trading, I'll do my one entry and I move my boss and I build with my stop loss and all this kind of stuff. That's great. But, realistically, missed this whole bounce trade over here and it got stopped out of everything down here. So look, this thing respected the levels to an absolute T. So I was looking actually sort of for, last couple of weeks in that, been looking for sort of like 4,400. But of course, in last week's video, I said sort of like, midway through the week, if this fails at this level down here, where's it going to go? And I said, this is where the buyers are going to be. And I'm sorry, but that does not get any more on point than marking there. So yeah, that was a very on point sort of trade there. We had a very nice strong bounce. This is a very typical sort of thing of gold as well, when it looks like it's about to maybe sort of top here, 3 rejections into a retest, and then it grinds up further through there. But this little wick at the top over here, with a nice, I mean, look again, it's a 4 hour, it's the end of the week. But it, to me, kind of looks like, okay, we've come up here, we've done our job, we've taken out all your textbook stops through these levels and these levels and these levels. Now we're seeing some sort of pushback into the end of the week, and we're overbought. I wouldn't be surprised if, you could get maybe a little bit of an early push here to the 52 here, but if we sort of do a little push up early and then a sort of push back down, these are the levels that I'm going to kind of be looking at again. Once again, 44.80 underneath there. I think that'll sort of see a deeper kind of correction. But I think you've got to honor the fact that this bounce was a couple of $100, wasn't it? Let's look from the lows over here where we do. I mean, there's 5% bounce. I mean, that's massive. And this is what I would say, though. I think there's sort of all this kind of positioning here. This is, I think, headline driven as well. But these kind of sort of grind up here because it wasn't a suit. I mean, look at how these candles moved here. That's like profit taking. Let's get in. Bam, 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 bam. This was a little bit more of a cautious grind up through the day. Yeah, we had this big push at the end here, but that pretty much is undone. But this kind of move here was just it's almost like a cautious adding to positions opposed to these kind of big boom, boom, and this sort of move through here. These kind of sort of things, which shows like full commitment to getting into those sort of positions. But if we go back onto this 4 hour here, we overbought. It has got a nice little wick at the top over here. Maybe disregard this last candle here, but I wouldn't be surprised if we get a bit of a fluffing around in this area. But certainly, I wouldn't be surprised as well if we do come back and visit some of these lower areas over here. This could be sort of setting up for a much larger inverted head and shoulders. If we put it on a daily, does it show us anything more? Not perfectly clear there. Look, it is a scrappy kind of left shoulder here, but the general idea being that, you've got a segment of buyers here, you've got a segment of buyers here. Well, this is moving down. If we see something matching up like this, that's where we could start to go, okay, hold on, wait. Here's a little bit of an inverted head and shoulders. We know that certainly the sellers are very keen to not let it go past this sort of like, I think we just tipped up, 95, so just under 4,600 there. But we can see time and time again, any chance markets had a chance to sort of sell it here, bang, moved up over here. But these kind of really sharp V-shaped recoveries, look, they can continue like this. I would say it's not common though. So I wouldn't be surprised if we do see something drifting down towards this area over here, and then we could potentially see some sort of little inverted head and shoulders happening over here. Now, again, it's not necessarily my base case because I don't think if that were to play out fully like this, one, you generally sort of match the shoulder over here in length of time to the shoulder on the other side. So it'd be something to like, effectively maybe like this kind of stuff, and to sort of say like that. So you'd still have a little bit of time sort of wish-washing around if this were to play out like this, inverted head and shoulders. Um, Neckline's pretty well defined, so then drag it down a little bit, but that'd be kind of neckline through here, where we'd say, okay, you go above there, you are going to break. But the point is that, yeah, we could certainly see it back down into 44.60, 44.50, these kind of areas over here. But should we start to see this play out here and we start to see something replicated like this, like multiple attempts to get it down over here and then push up, again, you sort of build it's not even the narrative of the story. You're just reading, what are the buyers doing? What are the sellers doing? Well, the buyers, said at one stage, hey, look, I'll take it down here. They're not going to wait to come back down over here if this plays out like this, as I might add. Um, and they hold this area here. That's when you start to get that larger sort of inverted head and shoulders structure. But yeah, this is very early days. Even if this were to be the case here, you still have a little bit of drifting along sideways here. You have a little level underneath 4,500 again, but then certainly be watching around that 44.50 area for potential inverted head and shoulders. Just getting those sort of notes done up. So this, again, as I said, this is not the base case at the moment. It's just for potential of these things of how they could sort of play out. I mean, as I said, if you, well, we did this actually for this, didn't we? Put this here. That still gives you, if this were to be the case, up until 9th, 10th of June, well, 9th of June. So let me just fix this up. Yeah, we'll call you a zone. That's riveting stuff here. There we go. Bang. So that's kind of a bit of an idea of the length. Oh, no, no, it's not. Jeez. This one should be, there we go. The blue are kind of the idea of the length. Should this be a bit of an inverted head and shoulders of where you could kind of expect the shoulder to sort of map out to. But anyway, as I said, that's not anything we're going to be actioning necessarily through, even this week. This is kind of where I want to see in the short term. This is the level where I could sort of potentially sort of see things at least sort of come back down and then a bit of a rally effort around that sort of 45.80 to 4,500. Sorry, 44.80 to 4,500, this kind of area here, and see what the buyers do with this section here, and see if they're happy to sort of step in. But I wouldn't be surprised if we do see a little bit of dollar strength as well, that we might see a little bit of a pullback on the gold and that, just from the end of week moves there. All right, tick along. And silver. Silver realistically is just still sideways. We can sort of update this box here a little bit. As you can see, similar sort of thing where it got that big push up here. And this is where I like to use these kind of like, multiple charts, a cross chart confluence. And we can sort of see like, when these things move together, you see this kind of move here. At the same time, you see gold move like this. That's the metals market moving together. And we can say, okay, well, there's the full commitment. Gold and silver will kind of, run in the same vague direction. You very rarely, outside like maybe one or two sessions, are you going to see gold moving up while silver's moving down. It's possible, because they do have similar, but also they have other drivers that can sort of, contradict their movements. But generally, if the metals market's moving, they're both moving. For instance, here, they both shot up. That's great. Where was the commitment with the metals market when we're looking at silver coming into Friday's session? It tried, but it just wasn't there. The sellers are still sort of stepping in at these levels and it's still within this sort of range over here. So this is why I'm a little bit sort of not necessarily believer that unless we get some sort of extra headline driver, are we seeing these things massively recover at the moment? And remember as well, we're still on the underside. We're fluffing around this area over here. So I think there's still downside risks with metals, to be honest. But, as you can see, sort of like, yes, it got that push like gold did. Gold actually seemed to outperform it a little bit through this period because gold actually put in another little push before sort of selling back down. This didn't even last outside the hour. Big spike up, sold straight into. And you got to think sort of like, if they're trying to sort of push it, here's the big demand. Where's the next leg? The next leg, they're just going, hey, that's great, give it to me so I can sell it at 76 again. Boom, I'll sell it again. And this is why I think that sort of like, you got to use these things. You can't look at necessarily just one market and say, yep, that's what's going to be that's going to be the direction. If we see gold and silver both getting hammered or both flying through the roof, then we can say, okay, the metals market is moving. The move is probably more sustainable. But when you get a divergence with them, I say slight kind of divergence in the sense that gold obviously held up here and then sort of pushed back down. It to me doesn't fill me with a lot of upside confidence. So I'll certainly at this stage I'm not going to be sort of looking to buy these things. Come sort of Monday, Tuesday through Asia session and that I'll certainly be looking for a break back down under. This was a zone that we put in a couple of weeks ago, that I put in a couple of weeks ago. We could see that the market, once again, really sort of respecting this level through here. And so with these sort of things, you sort of think, let's make it a little plain to get rid of this. Um, you know, while it's above this, yeah, it's all good. While it's below it, well, obviously the risk is for the downside, that kind of thing. Yeah. So I think sort of certainly if we break through sort of 45, sorry, 70. 458, 70, call it 74.50 just to be on the safe side. A couple of cents either way in that. Below 74.50, I think you're coming back down to target. The bottom side of this range. Look, it could sort of just be okay here, pull back, holds this level, and then we shoot back up higher over here. So I'm not sort of firing into this position. I'm not believing the upside at this point. But maybe a test or two of this mid 74s and it holds there, might give it a little bit more of a idea that, you were the buyers, now they move back up and they're holding this zone here. Well, if they hold this zone here, what's happening? It's moving in this kind of direction. And so you could expect it to continue in that direction. But it comes down to them holding this level here. You fail to hold this level here, well, we're going to come back to where we've seen them previously, which is down over here. I'm going to do actually sort of too many little circles, hard to sort of differentiate what these things are, but that's the level there. I'm called buyers. That's the sort of pattern that we're happening at the moment. So should you hold here, we move up over here. Should you fail and break through this level, we're coming back down to test the buyers back down over here. But at the moment, we're seeing them sort of trying to push up a little bit. You fell down under here. That's where we're going. And this is the thing, you're not trying to sort of reinvent the wheel. You're just going to say, okay, where have we seen them previously? If they break through there, most likely where are they going to show up next? And that's what we're trying to sort of do with this kind of stuff here. All right, and let's tick on with Aussie. And Aussie, same sort of thing, sort of really grinding up through here. Now, Aussie's a little bit different, obviously, to the metals. It's got to be sort of in tune with it. Let's actually get rid of this for now because this didn't seem to play out. Getting back above this little level over here, I think kind of, well, not, I think it does kind of make that obsolete. And then you could maybe join these things here, but I don't think that'd give us anything. Nah, not enough to sort of say, hey, one here and then supposed touch over here based off that anyway. However, let's clean it up. Oh, we're sitting with 55 things on the chart. And I still am looking for that to kind of potentially sort of play out. So look, I said when we got this sort of break through this like sort of big wedge at the top over here, that these things very rarely do they sort of break and then just keep on going down. Generally, you'll get, and I'd look for what I call a sort of a retest of the break point. So you can see quite clearly here, this is where price sort of broke through that triangle. This is on a daily, this triangle as well, this rising wedge. However, we never got the retest of it. And it doesn't matter. I mean, look, not that it doesn't matter, but generally you like to see that sort of full thing break, retest, lower low in this case, or higher high if you're going higher, to sort of feel like, okay, there's a full structure completed. It does look like it wants to sort of grind towards there now, and that's up around that 72.20, which is kind of sort of like where we actually saw the previous highs, kind of on the way up over here as well. And if you look at these figures, again, these things start to develop across the charts. It could be a sense of, if we do see the sellers accept lower than what we previously had at sort of 72.80s, a little bit of a move down here, start to see a little bit of head and shoulders sort of playing out here. This was obviously that little sort of move that we were saying down over here. This is what we sort of covered last week, and I said put this on the daily. You could probably see it a little bit better. There it was. Yeah, I told you. Should this sort of come up a little bit higher here, that's the wick high, which could potentially give us that inverted head, not inverted, sorry, just the normal head and shoulders. It's been so long sort of trying to get these bottom things, the head and shoulders and that, so it's not an inverted one. That still gives us a price target sub 70. So yeah, that's still a possibility. Look, it's all predicated on getting down underneath sort of 71. 71, as you can see, how many times the buyers have held it, held it, held it, held it, held it. The more times they hold it, the more you're going to get a bunch of stops that are going to be sitting underneath here. Do a better one than that. Stops. Whoop. There we go. So the more you're going to sort of get the stop sitting underneath here, which is going to accelerate that move once it comes down, if it does sort of get down over here. Now, it doesn't mean that sort of early week we're necessarily seeing it come down here. Certainly, if we start to sort of break down underneath Friday's lows, underneath 71.40s, then you're coming back down once again for another test of 71. But that again is sort of showing that, you are seeing this kind of development where the sellers are kind of accepting a little bit more. The buyers aren't willing to push it up so high. And really, this is your make or break area. Because if you get down under here, how many times have I bought it, held it, bought it, held it, bought it, held it? People are going to sort of protect themselves should it happen to actually break back down and get down underneath 71. So underneath sort of 71 or 70, 80, or they're give or take a couple of cents of it all. I think that really does open it up, and then we're sort of potentially even sort of coming a bit lower than the 61 over here. Like the 61 was fine before because we had that little sort of bear flag kind of thing playing out. But I wouldn't be surprised then if you're looking for potential sort of head and shoulders measured move, which takes you to, as I said, 69.60s, should that sort of come. However, there's a couple of things we need to see with this. One, again, look, if we've got this zone through here, unable to close above it, doesn't mean necessarily things are going to turn around. Again, we could have a headline come out and it could spike us all the way back up over here. We've seen these things happen. However, just as you look at it, at a sort of structural play out here now, I still think there's work to be done down in this area over here around the sort of 70 cents and that. So I other than a short-term trade, I wouldn't be necessarily, well, I'm not going to be necessarily sort of buying this thing with great upside potential at this point. Should we get back down over here? Well, then obviously we've got to see how the rest of the market's working, have a look at sort of like how the dollar's playing there, what's happening with the metals, what's happening with the Middle East situation, all those sort of factors and that. But I think if you want to sort of like play this to the long side, I think coming back down here looks a lot better and a safer kind of bet than we are sort of getting up over the top over here. I mean, even if we do come down over here, again, this is a building up and developing. This could be a bigger play, actually. Only because I zoomed this thing out just a second. Find where these little things are. Something like that. Now, this is a bigger sort of thing. This is, I don't know, where's this? Let me drag this thing through here. This is a lot sort of, this isn't like next week's trade, but you see how these things start to develop. This is definitely looking like a little bit of a head and shoulders pattern. Should we come back down over here? Again, you very rarely see these things break at one time. Maybe, depending on the speed and whatever, it comes down. We've got a bit of a confluence over here, previous highs from way back over here. But, we could start to see, obviously, a bit of a rally effort here. But then, as I said, you could start to see potentially a move in of a lot of sellers coming in, back up around the sort of 71 area, break down over here. That could spell, again, maybe not down over here. We'd have to have to sort of get to that point at that time. But, short term, we have a potential head and shoulders playing out. Medium term, or say maybe long term, we do also have a little bit of a larger sort of head and shoulders. And I covered this the other day as well, just because I'm jumping back and forth with everything at the moment of these large negative divergences that we're seeing across a lot of these things at the moment. This here, as you can see, I haven't got this one drawn out on this slot here. Where's the other Aussie? Do I have it? No, okay. I can't be bothered sort of flying through them all. You can see it here. Here's the high, here's the other high, which is obviously way lower, plus prices above high. So we've got a large negative divergence happening there. If we have a look at, here we go. There's your negative divergence against the yen, negative divergence, which absolutely got smashed against the New Zealand dollar, negative divergence on Aussie against US, negative divergence against the pound, obviously to the bottom side because of the pound first. So, there is on this is on a weekly time frame. There's a lot of argument for the idea that we could be seeing some sort of potential sort of weakness with Aussie through the next couple of months. Obviously, there's a lot that needs to play out with these sort of things. But if we jump back to what we're doing in the short term, a negative divergence could also start to sort of be playing out and start to sort of show itself as larger head and shoulders. And with that, it's sort of, as I said, these things don't just break down in one go. You're going to see a rally effort here. We're going to see a second push here, second effort coming down to the downside, breakdown under here. This is a trend line since back in April. They're going to defend this should they get a chance to. But equally, if they do break this, it's going to be very significant. And that's why I'll say that sort of like you got to look at different time frames with this kind of stuff as well. I mean, look, that's a further outlook. That's over a couple of month outlook. Um, but it's something to be aware. And the thing is, what the reason I'm sort of mentioning this at the moment is that with all these kind of potential negative divergence, well, not even potential, with all these negative divergence showing up across a bunch of different crosses with the Aussie dollar, short term head and shoulders here, potential for a larger head and shoulders setting up here as well. Admittedly, early days, yes. Do you really want to be buying and packing and putting your whole life on Aussie, going up into the high 74s at this stage? I don't know. Look, it's been very resilient all the way through here. It just keeps grinding higher. But these things don't always go up forever, and I wouldn't be surprised if we do see something that could start to sort of show a little bit of a pullback here. Do something through this point here, just for a bit of fun. This one, because again, this is third quarter kind of length trade. Again, you see how these things start to line up exactly where we've got this measured move coming here from this little head and shoulders. Should this play out, well, it's coming in pretty much right on the 23%. Yeah, right on. Let's put this onto the right here. Yeah, there you go. Right on the 23%, which is still very bullish. So you are going to get a reaction should you get down over here. So you're not sort of shorting this thing necessarily think it's coming down. It's going to mid 60s from tomorrow. But should we start to see the little things break 71, then we're targeting down 69.50s. Look for a rally. Rally could still come 160 points. Second effort through here. This is really a big time that we could see a lot more downside on Aussie. Anyway, again, I get carried away with these things. In the short term, could see a little bit of move up here, but if we see sellers in at 72.20, then I'd be looking for a break of 71 for a head and shoulders play out target of 69.50. All right, so it's probably a little bit longer than I sort of typically sort of spend on the Aussie there, but as I said, look, we've got that sort of short-term outlook or short-term slash medium-term sort of outlook with it. However, again, it's the idea of basically, look, are you going to be selling into rips or are you going to be buying dips? And in the short term, I could definitely see a little bit of upside here, but I don't think this is necessarily the time you're looking to sort of bet the house on sort of getting long. All right, and finally, just have a quick look at what data we do have sort of coming. It was pretty quiet on the data front this week, but sort of coming up to this next week, we're going to get quite busy. We got jobs coming, NFP coming on the Friday there, but let's we got bank holiday. I always like seeing what these bank holidays were. They haven't. Oh, it's King's birthday. Of course, it's in Australia. Why is it not mentioned for Australia as well? We don't have the bank holiday here. I don't think that's the case anyway. However, oh no, no, what am I talking about here? That's next week for Australia, but they're doing it on the 1st. Okay, that's interesting. Anyway, for whatever it's worth, Yep, they're New Zealand's on bank holiday on the Monday there. A couple of bits of data. We got so come Monday, we got inflation gauge, and then we've got sort of okay, where was that previously? 26. So coming down is a little bit weaker for Aussie. Should that sort of come, because of course lower inflation, less reason to be staying incredibly hawkish. I mean, look, inflation is still well above target, so they're not about to sort of flip dovish. But the first step is to go from hawkish to a hold, and then down the track when things are sorted, then you go hold to dovish. But at the moment, the dovish move is a hold, opposed to obviously a hike, which would be the more hawkish kind of move. Anyway, we've got job advertisements, minus 0.8%. Not great prior to that, but again, look, it's not going to be a massive market moving bit of data coming out there. It's just little pieces of the puzzle to really sort of pop into place. Anyway, through the rest of it, we've got a bunch of PMIs that are coming out. We've got PMIs 12 o'clock on Monday, which is technically Tuesday morning there. Again, these are the ones where we're sort of looking above 50 for expansion, below 50 for a level of sort of contraction. Moving through building approvals, getting a little bit better, but still negative in Aussie. Bit of data out there. We've got jolts. So jolts looking dead flat. Okay. I mean, in regards to the sort of like job market over in the US at the moment, it really seems to be a non-fire, non-hire kind of sort of scenario at the moment where, you're not seeing the sort of like necessarily, actually NFP last month was pretty strong. I think we got over 130 or something. But as you can see here, it's like, that's pretty flat. Like it is exactly flat. Expected with jolts like job openings, 6.87 million, same as last month. We've got Aussie GDP looking to slow down. Again, that's not Aussie positive for a bit of data. Should that come in as we're looking at there? Because the idea there is if it's slowing, if GDP is slowing down, well, what do you want to do? Do you want to hike? Do you want to make it tougher kind of conditions for people to sort of, basically get money and basically drive investment? Well, obviously not. So, a weaker GDP output there is obviously going to sort of lean more into the camp of, well, they're not going to hike. So again, the dovish move in that situation is a hold. And it's just pieces of the puzzle that you're going to sort of put in there together. We got Ueda speaking, yeah, for what it's worth. BOJ, good to keep on the peripherals, but again, not necessarily something that I'm looking too closely at. ADP, 116, it's not too bad actually. Let's actually see, you can see this is moving certainly in a positive direction here. We've gone from 22 to 63, 62, 109, now 116. So jobs market's certainly looking a lot stronger over in the US. We got services PMI ISM, and that's on Wednesday night. So a couple of bits and pieces. Got Bullock talking on the Thursday. Lagarde speaking for what it's worth. Really Bailey speaking for what it's worth. And then, of course, we got non-farm payrolls. Okay, so we're looking at a little bit of a slowdown with the job numbers over there. Unemployment, 4.3, is not too bad. Hourly earnings up. I mean, that's positive for the dollar if we do get that. But NFP sort of looking to cool a couple of thousand here. Now, if you look at what they've done the last couple of months, take it with a grain of salt because you can see here 58 came in at negative 92, 66 came in at plus 130, 65 came in plus 178, 65 came in plus 115. So, they're not really on the mark with with the forecast recently. However, it's just good to be aware of what the market is potentially sort of pricing for. Because whether they actually come in at that or not, well, we'll see, and we'll see how the market reacts to it. But realistically, they haven't been on a hot streak with their predictions more recently. But you may see a little bit of dollar weakness coming into it based on the idea that that maybe they've got this one right, and the number may be a little bit lower. But yeah, that'll be remain to see. Okay, that's it for a bit.